There
we go. Morning, everybody. Thank you very much for being here this early, I suppose, after a long weekend. Can everybody hear me okay? So you'll manage, if you don't mind, if my sound goes away, and obviously if there are any questions.
Okay, perfect.
Okay, brilliant. Yeah, it was a bit challenging. We wanted to pick a topic this morning that was quite exciting for us, and there is some exciting developments which I'll get into probably a little bit closer to the end of the presentation. But for now, I mean, you know, what we've tried to put together is just a little bit of a demo, I suppose. You know, going through trade credit insurance from a proposal form perspective. The team and I, we meet obviously quite often, and we just discuss the types of questions that we get in the market, and we figured we might as well go through our proposal form, which we actually call a request to quote form. So right off the bat, there's already a difference. So if we use proposal form or request to quote form, you know, please note that those are interchangeable. If this is a bit boring, I apologize. But I'd like to really go through just our request to quote form. And what we're going to do is we'll be going through each line item, and I'll be explaining what each line means. Okay. If you have any questions, please stop me at that stage. I'm very happy to discuss it. We'll definitely get through the proposal form in an hour, and I'm hoping to obviously get through a little bit more. From a challenge perspective, I'm not the biggest fan of wasted time or admin. And if anybody here can identify a question that's in our proposal form that doesn't need to be there, let's discuss that, and then we're very happy to remove it. Right? We pride ourselves on the fact that our proposal form, each and every single question is important. It's important to us, and it's important for us to understand the risk that we're getting involved in and the structure of what the client is requiring. Right? So it's quite important that it's a 4-page document, but each and every line item makes a difference in our world. And I'm very happy to obviously talk through those. Again, it's a very interactive session, so please get in touch. Tell me where we're missing the boat. Tell me what makes sense. Tell me what doesn't make sense. I'd really like to be in a space when we get to the end of the session that all our brokers are comfortable in what the proposal form looks like and what the proposal form means. So if that's a good space, unless there are any questions for now, let's crack on with that. I'm going to share my screen. I'm going to do that. And then at the end of, once I've gone through the request to quote forms, what we'll be doing is we'll also be going through a little bit of a snapshot of our new trade credit insurance system that we purchased. We actually bought it before lockdown. And if I can give anybody any advice when it comes to IT systems, it's that I would highly recommend that you don't buy an international system if you're going to be going into a global pandemic with travel restrictions. It created a bit of a tough time, but we're there. We're live on the system, and this is, I suppose, the first day that everybody's going to see a little bit about the system. And from here, what we'll be doing is we're going to be rolling out the system to our brokers first, and then to our policy holders. Just a little bit on the system. It's a fully interactive portal. It allows policyholders and brokers, obviously the broker of that policyholder. It allows you to interact with us directly. It allows you to request cover, increase, decrease cover, load claims, load premium declarations, manage the portfolio. There's no room for hiding anymore. You know, the system tells you exactly whose desk, you know, any work is on. So if you're waiting for an underwriter to make a decision, it actually tells you who the underwriter is that's making that decision. It doesn't just say in progress, you know, or some kind of blanket covering like that. So we're excited. We feel that it's going to put us certainly on the map from a trade credit insurance product provider perspective, and may even put us a little bit ahead of the competition. the business that we invested in is a business called Tinubu Square. They're a French-based trade credit insurance platform, and they're the world standard as far as we're concerned. And we've brought them here to South Africa. So now all we need is for the rand to strengthen so that the system becomes a little bit cheaper. But we'll get a little bit on that a little bit later. Okay, so departure point. If anybody has interacted with us in the beginning, you would ask us for a proposal form, and we would come back with a question that says, does your client want a single debtor solution, or does your client want more of a comprehensive trade credit insurance solution? Okay, that's a really important question for us because our business changes at that point. Okay, so right from the beginning, we need you to understand what your client's requirements are, right? If your client is only looking for a single debtor cover, right? So that's where they're looking for one buyer, whether it's one shipment. We've had clients who deliver to municipalities, as an example, and before they deliver to the municipality, they get us to underwrite that municipality. If we're happy to go on risk, obviously then they insure that shipment. Okay, so it's one shipment. I hope you guys are okay. I'm not going to go into what trade credit insurance is because I'm hoping by now there's a little bit of an understanding of that. If you would like proper trade credit insurance, kind of a dump of what we do, how it works, and all of that stuff, please get in touch with us at tradecredit@hollard.co.za. That email address is everywhere, and we can obviously set up a full training session with either you and clients or a group of brokers together if obviously there's enough interest. Okay, so
Gareth?
not going into any product training. Yo.
Just for the benefit of those of us that didn't eat our carrots when we were younger, can you make the slide slightly bigger, please, if possible?
Oh, absolutely. Sorry, I haven't even got started talking about the document yet. I will certainly make it bigger as I get into it. So the request to quote form for a debtor details. Okay, so that's a single debtor product. So to Toby's point, how do I do that, Toby? Oh, Toby has something. There we go.
Yeah. There we go.
Okay,
Thank
cool.
you. Much better.
Okay, so if you're looking for a single debtor solution, right? So it's a named buyer. Like I said, it's either one transaction or it's multiple transactions to that same buyer, right? Okay, it's a named buyer. That's the important part about it. You know who the debtor is that your client wants cover on. They don't want trade credit insurance. They want cover on Woolworths because the risk is so big that if they go under, he goes under, right? Or I want cover on, Buchenpoel, Baki Brigade or whatever, right? And I just don't know who they are, so I want insurance cover on that buyer. Okay, so it's a named buyer type solution. You know who the buyer is. Okay, so that's where you'd use this request to quote debtor details form. Okay, it is the information on the buyer, right? So please collect this completed form on each buyer. Okay, so each debtor that you want the cover on, right? That's quite important. It's not a holistic approach. It's not a competitive product to the opposition. Let's say we're the only crowd that really does single debtor risk, and this is the form that we would need in order to underwrite that client. Okay, that one buyer. When we get into the request to quote form, comprehensive policy. Okay, this is the one that is more like a policy that would compete with a credit guarantee or a COFAS or a Lombard or a Euler Hermes. Okay, but for now, I'm going to get into the request to quote debtor details form. What is also important, just to jump to the end, which is the second page, required information. Okay, where a credit application form is not available, a fully completed request to quote debtor details form will be required. So if your client already has the credit agreement or the credit application form, that is the agreement between your client and their client, okay, the seller, your client, and the buyer, then we don't need this form. Okay, but if your client doesn't have a credit application form, then we would need this form to be completed on the details of the buyer. Okay, so not your policy holder, right? It's the risk that we're looking at here. Okay, as it says here, it takes us 3 to 5 working days to come back with a result on a domestic policy. and 10 working days for an export policy. Okay, domestic policy means that the buyer is based in the same country as the policyholder, right? So your client is South African and they're selling to other South African clients. Okay, does that make sense? Right? South African seller, South African buyer. For the purposes of trade credit insurance, though, we also include, from a time frame perspective, we include Namibia and Botswana debtors, probably in Lesotho and Swaziland as well. We'd include those as domestic buyers. Okay, so if your client is South African and they're selling to somebody in Namibia, it would still take us 3 to 5 working days to get a result. Okay, does that make sense? This is an electronically editable PDF form. Okay, so you can complete it, you can print it, whatever works best for you. Obviously, we feel that if you can complete it online, one, it saves trees, but also it helps with people with illegible handwriting like me. So it just gives us a better chance of being able to make sure that we're underwriting the right buyer. Okay, so if we don't have the credit application form, which is the agreement between your client and their client, and you know who you want or your client wants cover on, this is the form. Okay, most importantly, obviously, we need the client to put the broker in there. The policy holder or the seller obviously determines who the broker is, and it just helps us at that stage to know who the broker is. Remember the challenge: if there's any line item here that you don't think is necessary, and we can debate it on this call, we're very happy to remove it, because the shorter and the more concise a proposal form for us and for you, obviously, the better. Okay, so we know who the broker is. Then we need information on what the limit is or what cover is expected. Okay, so the credit limit required, that's the amount of sales on credit that your client is going to do to a specific buyer. Okay, probably about 90% of our book is on 30 days from statement terms. Okay, so that means that if you sold something today to your client, your client sold something today, okay, on the 22nd of March, what would happen is your client would then issue a statement, okay, on the 31st of March, and that is then due basically on the 30th of April. Okay, that's 30 days from statement. Okay, it's not 30 days from the invoice at 22nd of, so it's not the 22nd of April that the invoice is due. It's the 30th of April, so it's 30 days from that statement. Okay, so effectively there, if you had done a sale or your client had done a sale on the 1st of March, you would have to wait till the 31st of March before your client would issue a statement. They'd issue a statement and the payment would be due on the 30th of April. Okay, so if you can see by that example, there's all of the sales of March and potentially all of the sales of April that will be loaded as a limit. Okay, that's before any payment has been made by the client, because the client's only making a payment at the 30th of April. Okay, so you'd have to add together those 2 months. So you did 200,000 rands worth of sales and 500,000 rands worth of sales in April. You're at 700,000 rand. Your credit limit that you require would be at least 700,000 rand. Okay, so that gives your client that coverage that they needed. We'd probably recommend that you would rather ask for 1 million rands worth of cover at that stage, because you don't know if that 500,000 was a big month or if that 200,000 in March was a little month, right? So you want to make sure that the client is always trading within that credit limit. If we had found, for an example, that the credit limit was 700,000 rand, and in May, they did another 500,000. So let's say, obviously, 30th of April. Remember, the March invoices are paid, so the 200,000 was paid. Now you're sitting with 500 from March and another 500 from April. So that's 1 million rand, and you only have cover for 700,000 rand. So either your client can overtrade without insurance, or they can obviously just request us to increase the credit limit. Okay, depending on what their time frame is, it's either quite a quick decision, or if it's been a lengthy period of time, so probably more than 6 months before we did our last review, then we'd have to do a new review, and that would take the 3 to 5 working days. Okay, so I hope that explains how the credit limit required is calculated. The credit terms is obviously determined by your client. So that would be the 30 days from statement, or the farmers are often at 120 or 180 days from statement, as an example. FMCG guys, so people that are in, veggies, meat, fuel often are at, as little as 7 days, from invoice. Okay, so then if the guy delivered on the 22nd of March, the payment would be due on the 29th of March, right? 7 days from invoice. Okay, so that is not determined by us, that is determined by the client. Okay, the legal entity, so that would be who the business is. So I can't put a broker in here, right? Let's call it ABC. Credit limit, we're going to do R1 million. I don't know if that's a million. Yes. Credit terms, 30 days. Okay, and the legal entity, so this is the buyer, right? So this is your client's client. This is the one that you need cover on. And we're going to call this XYZPTY. Okay, and the trading name, so that's the business that they trade under. That could be anything. I mean, I was at the Westpac up the road from me the other day. So they trade as Westpac Budegari, but they actually called some other crazy name, right? So this one here would then be West. Okay, as an example, the registration number is the date that, the registration number according to SIPC. The reason why we need this information in here is because we need to know that this ties in with that. Okay, so that when we go to a SIPC perspective, we know that there isn't a typo here, because let's say somebody typed it as XYX by mistake, then we'd be looking at the wrong business. So we need the legal entity and we need the registration number so that we can make sure that we're underwriting the correct buyer. The trading name, I suppose that's an argument that that's not really relevant, but this is the brand, right? So this is the name that you'd often see in the news. So it's really important for us to get that trade style into perspective. So that's why we need the trading name as well. If there's a VAT number, obviously we can get you can use the VAT number. It assists us in exploring and obtaining more information. So we can again use either the VAT number or the registration number or the entity and the corroboration of those three items to understand exactly who the buyer is. The physical address, that's obviously where the buyer is based. And again, it's used to make sure that we're looking at the right client. Okay, there could be a business that has got two different branches, and we would need to know which one of those branches, because oftentimes we think we're dealing with this business, but it's actually a subsidiary entity at a different location. Right, so that happens sometimes. They don't have branches, they actually have separate businesses. So you think, for example, that you're dealing with Pick and Pay, right? But you're actually dealing with one of the Pick and Pay franchisees, and that registration number, as well as this physical address, would give us that insight into making sure that we've got the right client. Okay, the accounts department contact. So this is the person that we would phone at the buyer's offices. Okay, so at your client's offices. This is crucial for us because that's the person that we would use to phone for financials. Because, and I'll get into that now. Well, actually, I'll get into that now. We require financial statements for any credit limit request over 400,000 Rand. Okay, so you go back into this credit limit here, it's R1 million. That means we would need annual financial statements for that buyer. Okay, most of the time your client wouldn't have those financials, so we obtain those directly from the debtor. We sign non-disclosure agreements if they're required. And our process changes when there's a non-disclosure agreement in place. We go view the financials. We go to the buyer's premises and we go view the financials. We've even had meetings where the guys have held the financials up to this was a Skype, it was before COVID, to a Skype meeting screen so that we could see what the financials look like. They were in America and they weren't sending some South African business their financials. So this contact person is crucial for us. Obviously, the more information that we have here and the eligibility that we have to contact them is crucial. Okay, the banking details. This is the banking details of the buyer. This information should be in the credit app. In fact, all of this information is in the credit app or that credit agreement. And that's why these two documents are interchangeable. Okay, the reason why we need the banking details is we, as a part of our underwriting metrics, we get a banker's code. A banker's code is when we go through the banks and we can ping an account to see if R1,000,000, or 500,000 Rand, because it's on 30 days from statement, is the usual kind of flow that goes through that account. Okay, we don't have access to the actual bank account, and we don't have access to anything. The bank gives us a ping, but with Poppy coming in, quite a few of the banks have stopped providing those bankers codes. So we do suspect that in time, this banking details section will fall away. And we are kind of considering other metrics that we could use in order to obtain the same level of comfort, like bank statements, okay, from the buyer. They can send us them directly again, don't have to send them to anybody. And at the end of the day, people are very happy to give 3 months worth of bank statements to get a Vodacom contract or any other kind of, or if the bank asks them for any information, happy to send it. When an insurance company does, it seems to be a bit of a problem. But again, it's all above board. It's there to check the efficacy and the credit worthiness of the client. But we are quite flexible in that approach until people get used to what this new kind of Poppy world looks like. Okay, from a trade references perspective, these are 3 other suppliers to the buyer. Okay, these are not trade references of yours or the policy holders. These are trade references from the buyer. These would also be on the credit application form. Importantly, we don't expect you or the client to provide the actual trade reference. Okay, so this is just the person that we can contact. We've got an in-house research team that makes contact with each of those suppliers just to see, if it's a good trading account, if they've got any slow payment trends, and the like, right? So that we can get a nice view of exactly who this buyer is, right? The next question, the next section here, obviously just says, has that data ever been rejected for cover? So your policy holder or your client may have a policy with credit guarantee. At this stage, credit guarantee has withdrawn cover on a particular buyer, and now you're needing single risk cover from us. Okay, so this is just, we would like to know that. It doesn't mean that it becomes an outright no, because there are various reasons why the other insurers would have declined that opportunity, and not all of them are bad. But over here, we would just like to know so that we can underwrite with our eyes open. Okay, so has this debtor been refused cover? Yes or no? Obviously, if yes, why, right? Is it because they haven't paid? Are they going under? Are they in deregistration? All of those things, because that'll assist us in making as quick a decision as possible. And obviously here, it's just if there's any other adverse information. So it's not necessarily linked to another credit insurance policy, but something along the lines of, well, this account is already overdue and we're worried, right? And the only reason why we want cover is because we're about to crash the car. Obviously, that's not the kind of risk that we want to get involved in, right? But we'd like to do it with our eyes open, because there are businesses that are in a tight space that are certainly still worthwhile and can certainly still trade out of their space, right? So if we can enable that, I think we'd be doing a great step in terms of getting the economy going again. The economy is in a tough spot, and it would be great if we could really get this economy ticking again. And these are the kind of conversations that we need to be having. If we don't know about the negative information, right, then we end up just digging longer and longer until we find it. But if you can give us that information up front, it just creates a level playing field and allows us to see the wood for the trees and allows us to go on risk where we need to go on risk. Okay, from a Poppy perspective, this is crucial. Okay, so do you have consent from your debtor to conduct this review? It's one of the reasons why we always ask for the credit application form, okay, instead of this request a quote form, because Poppy should be addressed in the request a quote. Poppy should be addressed in the credit app, and then we know that we're allowed to pull information from the bureaus, right, or from other sources, so that we can conduct a compile a review. If we don't have permission to do that, we cannot pull the information, guys. It's really important. Okay, so do we have consent to do this? Very, very important. May Hollard disclose who the intended insurer is? So the reason why this was put in here was we'd often get requests from a client that would say, we don't want the buyer to know that we're getting cover on them. Okay, so it's kind of a security behind closed doors. It's not a problem for us. We don't mind if the debtor doesn't know that you've got cover on them. But in reality, what does happen, oh, sorry, so this just says, yes, we can, and obviously put in your name, right? Because if you see this whole form, nowhere does it mention the policyholder. Right? That's the first time it's got any information on the policyholder. Okay, and what we found is that when we phone the buyers, the debtors, okay, to obtain information, the first thing they ask us is, well, who is this? Right? Who's asking us for cover on this? And if we aren't allowed to disclose that, then we say it's on behalf of Hollard Trade Credit, but we do find that that the guys become a bit cagey, and information is not as forthcoming as we would hope. So it does help if we can disclose who the buyer is, who the seller is, and obviously if we've got the credit application form, it would be on the seller's letterhead anyway. So then we'd have that information. If they request an anonymous underwrite, obviously then we'd need a special request to make it an anonymous underwrite. Okay, so do you see the difference? The request to quote is by default anonymous unless you put the details in there on that section there, and the other one is inherently open unless you ask us to keep it confidential. Okay, so those are all the forms or all the fields that you need to complete. As you can see here, so these are other information that we would require in order to complete the request. The 3 to 5 days is quite important. That only really starts once we've got all the information. Okay, if we need financials, as an example, and the buyer isn't giving us their financials, well then, we obviously can't conclude the review to that level, but we will underwrite it to that 400,000 cap at the moment. Okay, so we'd underwrite to that 400,000. If we're able to obtain the financials, we can obviously go higher than that. But if we don't have the financials, it's virtually impossible to stick to the turnaround times and giving you the full cover, obviously. Okay, so credit application form is a great one, right? But where you don't have one, we need this form completed. I think that's easy peasy. Again, if you have the credit application form, you don't need this document at all, but we would need signed annual financial statements and updated management accounts, okay, if the credit limit required is more than the 400,000. Okay, the reason why we want the management accounts is because what could happen is the financial year end could be December, let's say, so December 2021, but their financials aren't ready yet because it takes them 4 months to compile them. So we'd only be getting December 2020 financials. Now, a hell of a lot has changed in the last 15 months, right? 15 months and 22 days. So we would request updated management accounts to bring that December 2020 up to date. Okay, up to date means we'd prefer the management accounts to be no older than 3 months, but in reality, 6 months would be acceptable. But again, the more information, the more updated information, the quicker we can make a decision. Okay, 3 months bank statements. If we don't, if you bank with Citibank and Investec, they were the first 2 banks that didn't provide bank codes. F&B has now joined the field here. And as mentioned, I mean, if we can get the bank statements, that's great. We do look at them. Okay, so it's not a case of we've requested stuff that we don't look at, right? We've requested a credit application form or this one. We use all of that information. We use the financials on the management accounts to get a position of the business. And then the bank statements obviously would help us. But if we can't get hold of them, we can make decisions without them. Okay, then the only real difference between a domestic debtor and an export debtor is that we would want the signed financials and the updated management accounts for all limits. Okay, and the reason why that is, it costs us quite a lot of money to conduct an international review. Okay, so what we'd like to do is we'd like to make sure that we can get their financials on hand first. It's also better if they're in English. We're not, I'm not really good in many other languages, hardly English. And So it's quite important for us to get those financials in English. They don't have to be rand denominated. So it doesn't matter if they're in the local currency, but certainly English is crucial. Okay, so we'd need those before we log the review. We'd conduct a sense check to make sure that we're happy, with those financials at the limit required, and then we'd obviously kick on from there. If the financials don't don't paint a pretty picture, then we're very happy to decline it immediately. Okay, so we won't let you wait for the first those 10 days before we decline it. We'll decline it outright, saying that unfortunately we cannot help you. Okay, so I hope that makes a bit of sense on what's required, and then again, should you not have the information required, please provide the details. Okay, if that person is the same as this person, then obviously we're in the mix. But sometimes it's not the accounts department person. Sometimes there could be the relationship person or the CEO or the CFO that we normally that we'd engage with here. Okay, so it's not the same information. It's different information, and then obviously this is just a declaration saying that this is honest and true. And then obviously that we can throw the full might of the law if anybody lies here. I'm kidding. But that's the point. Obviously, if there's anything else that the client wants to add here that they're worried about, they can obviously put it in there, signed by the client, and obviously who they are. And that's the form. Okay, email that through to us at this stage of the game. I'll show you what the system looks like a little bit later. But effectively, that's the request to quote form for a single risk. Okay, I hope that makes sense. Toby, are there any questions on this one?
Yes, there is a question from Michelle, Gareth.
Okay.
Michelle says, to confirm, does Hollard offer once-off single transactions? For example, a prospect has received a larger than usual order from a debtor, but they don't want to insure day-to-day sales, only the large order. Would that be insured as a single transaction?
Absolutely. So Michelle, very happy to do that. Just talk to us, right? So you say we've got an existing client. We normally do 100,000 Rand, and all of a sudden we've got a 2 million Rand order, and that's a lot of cash to risk on this guy. We will insure just that one transaction. We'll have a start date, we'll have an end date, we'll charge for the risk used, and we'll only charge for that timeline. Okay, so if it's a one shipment, we charge one invoice on the back of that transaction, and that would be it. Okay, and then we'll be on risk for that transaction. So great question, and very happy to help where we can like that. Okay, so now moving over to the request to quote comprehensive policy. This is the normal one. Okay, this is the one that everybody wants cover on. The single debt is obviously quite a popular product, but in reality, the economy is is in such a tough space at the moment that clients want cover on everyone. They don't know who they don't know who they should be protecting themselves and who they shouldn't be protecting themselves. There we go. Okay, so can everybody see that? Toby, you can see that, right?
Yes, we can.
Okay, cool. So this is the trade credit request to quote for the comprehensive policy. So that's when you guys are looking for a batch of clients, okay? A bundle of clients, all the clients. It's up to your clients, and I'll show you where they choose that. Okay, we needed this form completed, and at the moment sent through to the trade credit at hollard.co.za. We will provide a quotation within 4 working days. If we aren't doing that, please let us know so that so we can get on that. And then for export policies, we obviously need 10 working days. And I'll go through why those 2 timeframes exist. Again, it's an editable PDF. And you guys can either print it or you can obviously complete it as a soft copy. Broker details, obviously, as you can see, first and foremost, the broker is important to us because that enables us to obviously interact through you with your client, or obviously with you directly if we need any other information. This form you'll see is more about the policy holder, because at this stage we don't know who their buyers are. Okay, we go through a process where we have to first see if we're comfortable with the portfolio, and we create a price. Once we've created a price, and the client's accepted the price, then we start with an onboarding process. And that's when we start underwriting each buyer. Okay, so there's a two-step approach. Okay, I probably should have got back into this one first. So if we get a request to quote single debtor, okay, the credit app or this request to quote debtor details form, after the 3 to 5 days, we will come back to you with the quote on that buyer. This is what the buyer is. We're approving this amount of cover, and this is what the price is. Okay, this is what the risk is that we're going to charge. The client then has a choice whether to accept or not. If the client accepts the quote, obviously then the policy accepts. Important note, if your client now wants to add another buyer onto that policy, okay, we go through the same process, underwrite the buyer. If we approve the cover, that buyer gets automatically loaded onto the client, onto the policy. Okay, we won't re-quote at that stage. We will approve the buyer and load them for cover. The reason why is because the client has already accepted the price and they've already accepted the policy, right? We don't want to be in a space where the client is just sending us requests all the time and we having to spend money, obviously, underwriting each buyer, and then the client never takes the cover up. Okay, so that's quite important, right? We're not an information bureau, we're an insurance house. So once the policy is live, those debtors automatically gets loaded onto the policy as they get approved. Okay, so back here. So now this is more information on the client. This is obviously who the prospective policy holder is. If there's a co-insured, okay, so there could be another business in the group, okay, so there's an equity sharing there, and they also sell to the same buyers, okay, and they want to be included under the same policy. So here we can add other co-insureds under this policy, okay. Obviously, then we need all the information. When we go to the information requirements, it'll be the information on all these entities. There isn't a limitation on co-insureds. We just opened up a space for 2, but if we needed more, we obviously don't mind that. Okay. So that's who the potential policyholder is. So now the structure of the quotation required. Okay. It's either a comprehensive selected policy or it's a comprehensive selected policy with credit management. The difference between the two, okay, a comprehensive selected policy that says that the seller, the policyholder submits buyers for cover. Okay, we'll underwrite those and they'll automatically be loaded on for cover as we go. Okay, that's obviously assuming that the quote has been accepted, right? So they do this process, we come back with a quote. If they accept the quote, all the buyers that they request cover on will automatically be loaded for cover. We pick up all the information costs on that environment. And we do have an initial 100 Rand per limit fee that we charge just in the beginning to get the policy going. And also it's more important to see if the policy is actually interested in obviously, the policy. There's a significant amount of costs, unfortunately, that go into providing a trade credit insurance quote. And obviously we're trying to separate the wheat from the chaff there. The comprehensive selected of the credit management solution, there'll be a separate agreement. There'll be the trade credit insurance policy, and there'll be a separate information agreement. Okay, what will happen then is the client can choose who they want information on. We'll bill for that information. Okay, if the buyer is approved for cover, the client can still have a choice whether they want to load them on for cover or not. Does that make sense, right? So comprehensive selected is where we're picking up the information costs and the buyer is selecting them for cover at their offices. They're sending it to us, we then underwrite it and it automatically gets approved. If there's a credit management component that's attached to the policy, the client can still choose whether they want to insure the debtor or not after we've underwritten the file. Okay, but the client gets our actual underwriting file in order to make their own decision. Okay, so that's the comprehensive selected, right? So that's effectively information costs and then the insurance component. Okay, so that's the type of cover. So if your client wants cover on who they've chosen, this is the better one. If your client wants to see the information before choosing cover, this is the next one. Okay, the with credit management comes with a Rand fee for information costs. Okay, it's not a risk fee, it's not an insurance fee, it's an actual information charge, whereas this one only comes with insurance premiums. Okay, so then, would you like to insure all your debtors? Okay, so that's where you submit your entire debtors aging to us. That's like the rest of the market, and we'll underwrite and approve those. Obviously, if you had chosen comprehensive selected, as we approve them, they get loaded on for cover. If they've got comprehensive selected with credit management, I suppose it's all debtors. So this one would be approved as well. It's an all debtor principle. Or would you like only the approved debtors over a certain limit? So this is where your client, and this is, I suppose, a little bit to Michelle's point, right? So if your client is normally, they've got a lot of debtors that are under 30,000 Rand, as an example. They don't really want to insure those because they're just irritating clients. They generally pay, and if one of them doesn't pay or a few of them don't pay, it's not the end of the world. Okay. So then you would say here, we only want to insure approved debtors over 30,000 Rand. Then what we do is when we take the debtors aging, which I'll get into now, we remove all of those debtors from that information so that we're only looking at the profile of the buyers that are actually going to be eligible for cover. Okay, this could be 5 million Rand, it could be 10 Rand, obviously, it could be anything. Okay, so that's quite important. It could also be naught, but then obviously it looks more like this one, right? The all debtors. Or would you like to insure just a selection of debtors? Okay, so please indicate the selection on the debtors agent provided. So I'm just going to quickly go to section 7 here. So I know this looks long. Here we go. We need the latest debtors agent from your client. Okay, that gives us the profile of their clients, and their buying behavior at a snapshot at least. On this form, because it's in Excel or numbers format, if your client could just highlight those for us, they can make them yellow, they can put a tick next to them, they can do whatever they want to. Just let us know that these are the actual buyers that we're looking at for cover. That changes the profile of the business significantly and can also change the price that we end up quoting. Okay, so does that make sense? Hopefully that does. That's how you get to a stage of who you'd like to insure. And then, would you like your premiums to be calculated on limit, on turnover, on outstanding balances, on a fixed monthly premium? Okay, so shucks, we only have 15 minutes left. Damn it. So if you want to calculate a limit, that's obviously going to charge you on that million Rand that I spoke of before, whether your client uses it or not. Okay. If we're doing it on turnover, that's saying that even though we insured the guy for 1 million, if he only did 200,000 Rands of the sales this month, we'd only charge premium on the 200,000 used. Okay. On outstanding balances, what that's saying is, if we go back to the original example where we did the 200,000 sales in March and then the 500,000 sales in April. So at the end of April, the count was at 700,000, then you would declare 700,000. Okay. The premium rate is cheaper on an outstanding balances than it is on a turnover, because oftentimes outstanding balances is a bigger number. Okay. Or would your client want a fixed monthly premium? So fixed monthly premium is normally where they say they want to pay 5,000 Rand for insurance a month and they need 7 million Rands worth of cover. Then we'll underwrite their buyers up to the 7 million Rand and they'd pay us a flat 5,000 Rand. As the policy grows, obviously that 7 million cover is no longer good enough, right? Because now they've got 20 million Rands worth of insured debtors, as an example. Okay. So in an example like that, what we then do is we then move it from a fixed monthly to a turnover outstanding balances. I, funny enough, like the turnover one. And the reason why I like it is because you can see how much insurance is costing you. You know that for every Rand's worth of sales that you're doing, 0.5% of that is going to insurance. Okay. We also always have your FMCG. So if the credit limits are less than 30 days, then the policy will always be on a turnover basis. And outstanding balances policies, we normally reserve for longer term policies. So where the credit limits are longer, right? And the reason why we do that is because we want to know that the policyholder is as interested in collecting those outstanding monies as we are, right? Because as that 700,000 Rand example, if they had managed to get the client to pay that 200,000 before the end of April, then there only would have been 500,000 Rand outstanding, and they would only have to have declared on the 500,000. Okay, does that make sense? So that's the declaration perspective. And then, do you want an annual retention limit? So that's saying, does your client want an excess? Okay. All trade credit insurance policies have got a proportional excess, which I think I've spoken about in other chats before. It's an insured percentage, right? So it's a call it like a quota share type excess structure. But some clients, to reduce cover, say we would like to cover the first R1 million in bad debts, or 200,000 Rands worth of bad debts, and then we'd obviously include this into our pricing so that the premium comes down. Okay. We don't do individual first losses. So a first loss on each buyer, we find that that's quite messy, and it creates a bit of an us and them between the insurer and the client, right? Because if there's 200,000 Rand individual first loss and the client's account is at 500,000 Rand, when we get a claim and we start recovering those monies and the debtor pays us 300,000 Rand, now it's within the client's excess. Now what? Do we stop our work? Do we then hand it back to the client with a second-hand file? It's a bit of a messy scenario. So we'd rather get in line and start working from Rand 1. Okay, so that we're always involved in the process. Even when there's an annual retention limit, the client must still hand the file over to us. We'll still handle it like a claim. We just wouldn't pay the capital indemnity. Okay. Too far. Operating activities. So this is just in what code, in what industry does your client operate in? Are they government? Are they wholesalers? Are they retailers, manufacturers? And here's the whole, a SIC code summary that you can obviously choose. That gives us an understanding. Okay, so section 1 is obviously the broker. Section 2 gives us an understanding of the type of policy we're going to quote on. Section 3, that's still on section 2. Right, so that's the SIC code. That tells us the area of risk that we're going to be looking at. If it's construction, as an example, then we know that we're in the construction game. That's quite a tough risk area at the moment. Okay, if we're in freight forwarding, that's quite a decent area because it's naturally diversified. Okay, so the sector that your client performs in is important as it starts informing the premium rate that we're going to charge. Okay. Next one. So what does your client's credit management look like? Do they have a contract, right? So this is the credit agreement, yes or no? We would want a credit agreement to be in place. And if you see here, we're going to section 7, we would like the credit application template because we want to audit it to make sure that it's up to date with the terms of POPI or the National Credit Act, just that it's a legally binding document. We've seen credit agreements where the guy's still going to sue in the Transvaal, right? In the event of a dispute. I mean, the Transvaal doesn't even exist anymore. Okay, so do you have a credit agreement? Yes or no? Are credit limits managed and adhered to on a system? So we just want to know, what is the client's credit management like? If the client your client has got good credit management, obviously that starts informing a cheaper rate. Okay, how soon after the due date do you place the debt on sub-supply? So if the account goes 1 day overdue, do you stop supplying? Or a relationship's more important than money in the short term, right? So we only stop supplying at 30 days past due date, as an example. Okay. Are you currently insured? Yes or no? If you are, with who? And why do you want a quotation? Is it a market exercise, which you're obviously not too big fans on, but or are you looking at a better solution? I mean, obviously, then we'd be able to help. Have you ever had your policy cancelled? I mean, that's like normal insurance, right? It's really important to understand the profile of the business. It doesn't mean that we wouldn't want to quote, but it gives us an understanding of where the policyholder is or the prospect is at the time of requesting a quote. Okay. And that happens quite a lot, by the way. There are policies that get cancelled. It's not the end of the world. Okay. Section 4 now is where we start looking at the domestic numbers. Okay. So this is if your client is in South Africa and they're selling to South African buyers only. Okay. South African buyers only. Are the numbers that you're providing for us VAT inclusive or VAT exclusive? Obviously, that's important for us because we need to know if we need to strip out VAT or not. Okay, the number of active debtors. This is how many buyers that you're looking at insuring, right? If it's all debtors, obviously it's all the debtors. If it's all the debtors over 30,000, then we'd delete all the debtors over 30,000, under 30,000, and we'd only take the number of debtors over 30,000. If it was a selection of debtors, obviously the number of the selection of debtors, right? The period here, so this is obviously just the year ending date. So we'd like a forecast, we'd like the current year, forecast in the current year, this most recent year, the year before that, and 2 years before that. Okay, so year minus 2. Okay, so obviously the period is where it would end. So December, whatever the financial year end is. Credit sales, cash sales. The reason why we need that split out is because cash sales are irrelevant to us. Consignment stock we don't insure. Okay, so those, and we can't insure cash sales because there's no credit transaction. So we need to know what these credit sales are. Even more importantly, we need to know that these are the credit sales only for these buyers that you've selected for cover. Okay, that's important. That gives us what size of business we're looking at, because the bigger the business, obviously the more it can cover the costs involved on a per debtor basis, right? But if you've got a small business that sells to thousands and thousands of little buyers, it becomes an expensive policy because there's a fixed rate that we have to incur when we underwrite each and every buyer. Okay, so one big client with a few buyers would have a cheaper policy than a big client with many buyers. Okay, because of the costs involved in underwriting the client. Okay, then from a bad debt and claim breakdown, same period linked to above. Do you have any bad debt provisions? Have you got an insurance claim? The reason why we've included both of these is because sometimes policyholders are quite selective in whether they consider something an insurance claim or consider it a bad debt, right? Or they're saying, oh, we're only providing for it, so we're not going to include it in the numbers. We want to know what those numbers are. We want to know how many losses you have, because again, that gives us an understanding of how risky your environment is or what your inherent credit management is like. Because the better the credit management of the policyholder, the more relaxed, I suppose, we can be when we manage a client, right? Okay, value of the largest loss, obviously that talks to severity and then the reason, right? Sometimes it's a market loss, that happens quite a lot. Sometimes that it just happens, right? So business rescue, liquidation, client ran out of money, whatever it is. Okay, what are your normal payment terms? Less than 30 days? Okay, so that's what the credit terms that the client provides, and then the maximum credit terms. The reason why we need to know that is because if you sometimes sell on 90 days, or your client sells on 90 days, we need to know what that exposure looks like. So that means we're taking now a 90-day risk on a client instead of a 30-day risk, right? So now I've got to predict further into the future. So it changes how we look at the risk of each of those buyers. Okay. Do you have special terms when you grant outside of the normal terms, right? So are there any instances where you change the process of how you issue credit? Okay. Please indicate if it's on statement, so 30 days from statement versus 30 days from invoice. If you remember that example of the 22nd of March to the 22nd of April compared to the 22nd of March and the 30th of April, that's statement to invoice. I'm yet to see another, but if you in case there is one, I mean, you never know. And then how many days from when the goods are delivered do you raise an invoice? That's quite important because the policy runs on a goods delivered services rendered basis. So if you've got cover on the 22nd of March and you deliver goods on the 22nd of March, that's covered, right? We would like to know that you're going to be invoicing that, by the end of March. We normally kind of give it about 60 days, more preferably 30 days, but I mean up to about 60 days to issue an invoice. It's not ideal, but it can happen. And again, so what would happen there is you would deliver on the 22nd of March, but because you're only raising the invoice during April, we'd only get that declaration in the April month, right? So we're a month late. So that's why that time frame between issuing the invoice and delivering the goods is quite important. And obviously your day sales outstanding and your financial year. Okay. The DSO, the day sales outstanding, that tells us how long basically the stock is out for before it's being paid for. Okay, so how many days does it take before you've recouped the costs? Recouped the sale. That's a very important number for us, and it also gives an indication of how your client sticks to the 30-day limit, as an example. They go on 30 days, but the DSO is at 90. That means they're not very good at collecting money on terms, which would tell us that it's going to be a difficult policy to handle, which means it might be a little bit more expensive. Okay, so now Section 5 is exactly the same, but for export clients. Okay, which countries do you export to? Okay, Zambia, Ghana, China, England, Germany, whatever it is. We can't do trade sanctioned countries, so we can't do North Korea, we can't do Russia at the moment. Zimbabwe, we can't do at the moment, although that's work in progress. Angola, CAR, DRC, there are a whole bunch of them. But again, type in the same information, preferably in rands, so that we can obviously see what you're working with. If it's not in rands, just let us know. I think that's quite important. There's the bad debt breakdown, all the same information. Now, the last point here, because I've spoken about these already, if your client has got some buyers that they have to have cover on, also not even going to consider the policy. Okay, so these are indication limits. You would type in the businesses here with a credit limit that's required. Okay, important from a POPI perspective. Do you have consent? Yes. If you've got the credit application form, please send those through to us for those 5 buyers. If you don't, we would need one of these completed on each of those 5. Okay. If you need more than 5, talk to us. 5 is pretty industry norm. So that means that we can then take this information. Okay, so this is just the same as this declaration that we told the truth. Okay. So on these guys here, what would happen? We'd get this form completed. All of these debtors here, we would run through a system to get an indication quote. So you would receive back a quote with the indication limits. Okay, so what is our risk appetite like, and what is on those buyers, and what the price is. If the client accepts the quote, only at that stage would we start underwriting all the other buyers that have been produced in Excel. Okay, all the buyers that they've requested for cover. They've requested all of them. Okay, as in over here, they requested all their debtors. Once the client is accepted, we'll then start underwriting all of those buyers. Okay, or all of the ones that they've notioned or selected. We would then get in touch with the client saying, send us the credit application form for all of those debtors that have been selected so that we can start the process. And we underwrite the buyers. That's unfortunately all I've run out of time. That's atrocious. So I'm not going to be able to get to the system, but it exists. And do I have time, Toby? Do I have to answer questions?
Yes, please. So there's a question in the Q&A. What is Hollard Trade Credit's preferred client industries, and in which industries, if any, are you reluctant to quote on?
So that's a really good question. It's a difficult question too. I mean, obviously there's risk everywhere. We're quite heavy on the steel industry and on the construction industry at the moment. Got quite a bit of agri exposure too. So I would say that those are not preferable, but it's not because we don't like them. It's just because we've got quite a lot of capacity there, and we'd like to obviously diversify our risks. But we insure everybody. We look at the quality of the buyer, and we go straight through and we underwrite each risk. We don't believe in declined sectors. Obviously, there's sectors that are inherently in trouble, and we obviously try and walk our way through that. But if we had declined sectors, then we wouldn't really be helping the economy out. And policyholders need cover. We'd rather give them feedback or insights into what the risk looks like, so that they can make the best possible decision for their business. I hope that answers the question.
I think it does. Thank you. I don't see any other questions on the chat or in the Q&A, Gareth.
Okay.
We've covered mostly everything, but just to highlight, thank you for a very informative session, as always.
Not the most exciting though, right?
Always
boring.
just highlighting the need for trade credit and what an important role it plays in South Africa's economy. So I think it's a very important product for clients to always be aware of.
Fantastic, thank you. And if there's any questions that I haven't addressed that are on this chat, please drop me an email on garethjo@hollard.co.za. I'm going to put my email into the chat. So there we go. Please send those questions through to me, and obviously I'll get in touch. If anybody is interested and they can stay on, Toba, it can obviously be the end, but I just want to obviously show them just a little bit of the front end of the portal, so that you can obviously see what it's going to look like when interacting with us, through the portal.
Okay, perfect. So thank you everybody for joining us. And Anonymous is asking, can we have a recording of the session? Yes, absolutely. We will post it on our iTOO YouTube page. I'll post the link on the chat right now.
Fantastic. Thank you. There's a lot of information in a short amount of time. I'm going to quickly
and expertly
show you.
delivered, Gareth, as always.
You took time. Okay, so Tubbs, can you see that?
Yes, I can.
What do you see?
You just need to make it full screen. I see the first slide says front end portal. There you go. Okay,
so in the portal, thanks for those that have stayed on. Obviously, if you're not going to stay on this, I'm not going to take offense. I've overstepped the runway again. But the portal will allow you to create submissions, modify, request quotes, upload policy documents, view the details, declare turnover, midterm adjustments. You can identify buyers for cover. You can see who's already on cover. You can increase and decrease cover on a particular buyer. You can notify us of repayment plans, right? So remember, this is the policyholder and all the insured debtors, right? So if there's an insured debtor that hasn't paid on time, you can notify saying, this guy's going to pay late, but this is the repayment plan. Are you happy with that? And we can approve it through the portal. There's zillions of reports. Like I said, you can obviously load claims, things like, obviously the admin around, how do you log in and if you forget your password, obviously that's all sorted out. There's a log that tells you exactly who's done what. So you're able to see if you've requested cover and it's slipped out or we haven't done it yet. There's a workbench so you can see exactly, like I said, who's got the system or who's got the file and working on the system with it. The first time you log in, you'd get obviously the terms and conditions. I suppose I'd expect you to, we'd want you to read that, but obviously you'd accept that, and then you'd get a two-factor authentication. This is just, I'm assuming it's on the first time, so you'd make sure that you're now logged into the portal, okay, and then you'd have to trust the computer, right, so that obviously that this portal can keep coming up on your computer, okay. From a broker perspective, what will happen is you'll log in at the top here. It'll say broker space. Okay, and then you'll be able to select which policy you're working on. Okay, if you're going to work on this one or Etiez's or on the Woolworths policy as an example, this is not live. The system's live. These are obviously just screenshots from a test policy or a test broker as well. If your policy holder logs in, they would go straight to this portfolio, okay, to this screen here. So this tells your client all of the insured debtors, what rating we gave them from an underwriting perspective, what credit limit we provided them with, what currency the credit limit is in, and what date we issued the cover on each of those buyers. So Trenery Furniture has got 300,000 rands of the cover, and cover was issued from the 17th of March. So that means that obviously from the 17th of March, all deliveries to Trenery will be covered, okay? You can export this list by just clicking the export button, and it'll come down to one of these downloads. And when you pull it out, obviously this is just a report with all of your buyers, okay, that have been listed for cover. This should be the same as that. And then on the reason here, the reason would be if there are any specific conditions of cover, okay? So that if Ignition Corporate Gifts, as an example, it was conditional on, that's the client. Henty's Juice in the Cape, it was conditional on personal surety. So it will say here personal surety from Mr. Henty's as an example. Okay. To add a buyer on the same front screen, I hope everybody can see this clearly. You click add a buyer, okay? You then come up with a selection. You type in the name of the business here or their national ID number. It then searches through the database and pulls up all the potential options. You select the one that you want cover on. So you want specifically cover on this Vodacom entity here. You select save, okay? And then you can choose which services you want. So you're now adding a buyer. You're selecting the buyer that you want for cover. Now that you're looking at this specific buyer, you click on services, okay? And here you go, you want to request a credit limit, okay? This is all through the portal. The next screen here, you type in the credit limit that you want. And in the comments section, obviously just the credit term. The reason why you've got to type in the credit term is in Europe, they don't use credit terms at all. So it's not actually a field. So we've had to put it in as a comment. So third additional statement, because that's important to us. And then you would submit it. Okay. And now it would say that obviously your application has been received and we'll be in touch to give you cover. Okay. So that's how easy it is to select cover, right? You just add a buyer, find the right guy, save him, choose what you want to do. You want to add a credit limit. How much do you want? And you submit it. And that's how you request cover in the new system. If you want to increase or decrease cover, so instead of adding a buyer now, you're going to choose detail. So you first select the client that you're in, famous brands, select detail. Then now you're in famous brands, click services. From services, then you can choose to increase or decrease your credit limit. And then you type in what the new credit limit is and you click submit and then we'll work on it. To submit monthly agings, you click on your actions tab, your turnover declaration, you select the file, so your declaration file, so they call it the auditing file or the substantiating information. You select that, upload it, and then you type in your declaration value. If there are different countries, you've got an export policy, you'd have obviously different declarations for each country, but mostly it would be South Africa on all of your buyers. And let's say the sales for that month was 475,000, then that's what we obviously you'd click submit at the bottom here, and then we would receive that 470,000. So 475,000, we'd then multiply that by the rate, and that would be the invoice that you'd get. Okay, then submitting claims, extensions, or repayment plans. Again, back into the detail. So select your buyer, select detail. What are the services? Either going to log a claim, you're going to request an extension, you're going to put forward a repayment plan, or there's just a notifiable event. So I don't know, things like we're expecting slow payments because of XYZ, right? So it's not that you don't need an extension yet because the account is within terms, but you do see something that there's a notifiable event, whatever that may be. Okay. And then once you've submitted the claim, we obviously need the information. So this is just further details on the claim. You put in all the invoices that have that you are claiming on, upload the files or the substantiating information again, and click submit. Right, and then we would know that that there's a new claim that has been submitted on this buyer. Okay, and you'll be able to then track your claims through the portal, and that's it. So it's quite a simple process, but it is designed to scale the business. So the point is that you'll be able to log cover, and through the system you'll be able to extract the required information. The other beauties of the solution is that we underwrite for a max limit. So that Trenery is an example, right? So you've requested 400,000 to the cover on them. We would underwrite them for the max that we'd be able to do. So we'd say Trenery, let's say we had their financials, we'd be happy at 2 million. There'd be a 2 million rand placeholder on the system. If your client or you then come and request cover on Trenery and there's still capacity left, right? So 2 million minus the 400 we've used, there's 1.6 million rand left. It'll issue the cover automatically. You don't need to send it through to trade credit at hollard.co.za. once we're live, we've rolled out. Obviously, for now, we still need that, but the view is that you won't need that at all. A minimum credit limits on the single debtor policies, we find that at 20,000 Rand, sorry, Lucille, we find that that's probably the least, but on the comprehensive policies, there isn't a minimum at all. Brokers have access to this portal with all their policy holders, and obviously the policy holder will have access to the system as well. So we're quite excited to roll out, and we're looking forward to creating quite a big song and dance. We're going to hopefully do one up here, another one in Natal and one in the Cape, and really do a big song and dance, hopefully bring some clients along and just really shake COVID off and get this economy going again. So that's it from me. Lots of talking again, but if you have any questions, I'm happy to obviously stay on for a bit, and if you've got them, I'm sure you guys can unmute yourselves by now. But I'd like some feedback, if you don't mind. Let us know what you think of the system, especially the trade credit brokers that have used, the other insurers' portals before. I'd love to know just that little snippet that you've seen on it. Does it look like something that you and our policyholders will enjoy using? Yeah. Thank you very much.
Gareth, before you run off, there was a question from Lucille.
Because let's say if somebody doesn't put
Can
in
you hear me?
voucher number,
I can, but I hear something else in the background.
Okay, that should be better now.
Very good. Thank you. Sorry.
Okay, Lucille says, on a single client application, do you have a minimum limit that you start cover on?
Yeah, so that's on a single debtor request, it's probably at 20,000. We just find that the amount of information that costs on 20,000, the effort is more than the reward, I suppose. So at that level, that's where we keep it. But on the comprehensive policy, there's no minimum.
Okay, perfect. Yeah. Lucille, I'm not sure if that answers your question. I have enabled your speaker if you need to chat. Cool. And Gareth, cool. Just a question from me: is the system available for brokers to start using, or?
So the system is live. We've started rolling it out with some of the brokers. We're providing the training. We're running it in parallel with our old system because that's the best way to do it. But absolutely, we are starting to roll that out. We haven't yet rolled it out to our clients yet. Because there's just one or two look and feel documents where the policy wording doesn't look like our PDF policy wording, and we're just tweaking those. But it's live, and if there are any policy holders any brokers that want to get stuck in and start requesting cover through the portal, please get in touch with us at tradecredit@hollard.co.za. We'll set you up, send you some login credentials, and then set up a training session if required.
Cool. And one other question from Johan, Gareth, on a single data application or quote, what document is completed to provide the info on the client?
On the single data, so that's that request to quote data details form, that's the small one, or preferably the credit application form. If the client already has that credit application form between them and their buyer that they want cover on, that's gold for us, right? Because that tells us that we get quite a big fraud verification process going through that. We make sure that the document is signed appropriately by the right principals in the business. So we really come back with the result telling our clients whether they've got a document that's going to stand up in court. Because if that document doesn't stand up in court, then unfortunately our clients are in the donations game.
Okay, perfect. Thank you. Thank you so much, Gareth. I see we are on 1:15. Thank you so much for an informative session. And to everybody, we will post this on our YouTube channel for you to go back and if you need to take notes, need to have a look at the system again. And remember, as Gareth said, if you need to get in touch with Gareth, it is garethjo@hollard.co.za. And his email address is also on the chat.
And then last final parting shot again. I think I said it every time, but if you need me at a client and you're not comfortable to go to a client by yourself and talk about trade credit insurance, let me know and I'm happy to join you. On the job training is the best way to do it. I'm going to be in Cape Town for the Cape Town brokers between that first week of March. I think it's the 3rd to the 8th or the 4th to the The diary is quite packed, but hopefully I can squeeze you in if available. But I would love to meet prospective or existing policyholders. I think it's important.
Cool.
I'm available at your disposal.
So that'll be the first week of April, right? Because March is sort of finished. Okay, perfect. Thank you so much, Gareth.
Cool.
And thank you to everybody that stayed on and participated. We will see you guys next week again. Thank you.
Bye-bye.
Bye.